Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Walmart stock so we can determine if it's a buy or a sell. Walmart is a large cap company, 425 billion market cap. They're trading at $158 a share, and they have 2.7 billion shares outstanding. 3 fun facts about them. They employ more people than any other company or entity in the world. That's including the government of China. They used to employ more people at one point, I believe, a few years ago, but now Walmart is number 1. They also own the big box retailer Sam's Club, and they generate more revenue than any other entity in the world, including Apple, Amazon, and that includes private entities, like government-run entities, like Saudi Aramco. I think they're number 2. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow was really high in 2021, almost 26 billion. It dropped a lot in 2022 and 2023. It is coming back up in the trailing 12 months at 19.5 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses, and that's really steady. Almost 14 billion in 2021, almost 14 billion in the trailing 12 months. Revenue is the sales for the company, and that goes up every year. Over 630 billion in the trailing 12 months. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows, past year 4, that's 580 billion. We discounted those numbers back to today using weighted average cost of capital. We get a value of the company of $527 billion. We divide that by 2.7 billion shares. And we get a calculated stock price of $196. They're trading at $158, so they're trading at a 19% discount. It's a buy according to the model. They're such a giant, they have such a big market share. It's really hard to ever see their stock price going down. There are 9 companies in the same industry as Walmart, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a ton in CapEx, $17.5 billion. That's just in a 12-month period. Because when they open a warehouse, a Walmart store, or a Sam's Club store, that dollar amount is carried in the balance sheet and depreciated over its useful life. So that's a CapEx cost. They have a good debt to equity ratio. For every dollar of equity, they have 90 cents of debt, better than the median average. They pay a 1.4% dividend. Target pays over 4%. They generate a ton of free cash flow, more than the other companies combined. They have the highest market cap, more than the other companies combined. Their price to book is a little worse than the median average. Their PE is a bit worse than the median average, although it's better than Costco. Their price to free cash flow is better than the median, a little better than Costco. And they have a really good price to sales ratio. Their price to sales is below 1. That means their revenue is higher than their market cap. Their market cap, the 412 billion, is 70% of their revenue. And their 5-year annual revenue growth rate isn't that good, only 4%. Much lower than Costco and all the other companies, except Big Lots. They're flat. Big Lots just cut their dividend. They did pay a dividend in the first quarter of 2023, but they cut it going forward. The company just released their earnings, July 2023 earnings. Not June 30th, 2023, July 31st, 2023. They beat earnings by 8%, revenue by 0.8%. Expected earnings $1.70, they reported $1.84. Expected revenue of 159 billion, they reported 160 billion. So for 4 straight quarters, they beat earnings and revenue. They should release their 1031 financial results on November 16th. They've done 9 stock splits. It's been a while since they've done one. Last time was in 1999, a 2-for-1. They only do 2-for-1s, 99, 93, 90. The first one was way back in 75. If you put $10,000 into this company 10 years ago and reinvested the dividends, you'd be doing pretty well. At $27,000 today, that's a 10% annual return. Let's look at their second quarter earnings release. This is for the quarter ending 7/31/2023. Revenue growth of 5.7%, operating income growth of 6.7%, EPS of $2.92. Even though we're in 2023, this company's in their fiscal year 2024. So for their second quarter 2024 fiscal year, they reported revenue of $162 billion. So that means they generated $162 billion of revenue from 5/1/2023 through 7/31/2023. That's up 5.7% from last year of $153 billion. Gross profit up 50 basis points, 24% compared to 23.5%. Operating income up 6.7%. They had operating income of $7.3 billion compared to $6.9 billion. And EPS up a whopping 55%. Last year was $1.88, now it's $2.92. So EPS is net income over shares outstanding. And that's just for the quarter, the second quarter of 2024. They keep $14 billion of cash on their balance sheet. They do have a good amount of debt, $50 billion of debt. Lots of cash flow, $18 billion of operating cash flow. Operating cash flow is net income minus the non-cash items on the income statement, adjusted for changes in working capital. It's on the statement of cash flows. We'll look at that in a little bit. That's double from last year of $9 billion. Free cash flow of $9 billion, up from $7.2 billion. So they had a really good quarter relative to last year. And they bought back 8 million shares. That's year to date. So $1.2 billion of buybacks. They pay a dividend and they also buy back shares. Those are the two ways to reward investors. U.S. sales is up from $105 billion to $111 billion. That's an improvement of 5.4%. Operating income is also up in the U.S. from $5.7 billion to $6.1 billion. And there's a big growth in e-commerce, 24%. That's the growth from their website. Walmart International is up 13% from $24 billion to $27.6 billion. Operating income up 14% from $1 billion to $1.2 billion. Their international growth is led by China and Flipkart. Flipkart is an e-commerce company located in Bangalore, India. Sam's Club is down a little bit. $21.9 billion last year, $21.8 billion this year. But they're more profitable. Operating income is up 22% from $400 million to $500 million. Next quarter, they expect revenue to grow 3%, EPS 145 to 150. For all of 2024, they expect revenue to grow 4 to 4.5%, EPS 636 to 646. Let's look at their full income statement. This is the 3 months ending 7/31/2023, the 3 months ending 7/31/2022. And this is the trailing 6 months for 2023, the trailing 6 months for 2022. Revenue of $160 billion, membership income of $1.4 billion, so total revenue $161.6 billion, up 5.7%. They have to buy a lot of products, and they have payroll, and then you have depreciation, amortization, many other expenses. That's the cost of revenue, $122 billion. Then you have operating expenses, like marketing, $32 billion. Pretty slim margins, $7.3 billion operating income, up 6.7% from last year. This is just for the quarter. Interest on their debt, $540 million. Interest on leases, because they lease some of the property they operate in, $99 million. A non-operating gain of $3.9 billion. Income before taxes, $10.7 billion. $2.7 billion of taxes. Net income of $8.1 billion. EPS of $2.93. 2.7 billion shares outstanding, a little less than last year of 2.74 billion. Let's take a look at their balance sheet. As of 7/31, current assets of $82 billion, current liabilities of $99 billion. That means their current ratio is below 1, so they're going to need to add some more debt to get through the next 12 months. $14 billion of cash. That's a big jump from the beginning of the year of $8.6 billion. $7.9 billion of receivables. This is how much money other companies owe them when Walmart sells on credit. They're always going to have a ton of inventory on hand, $57 billion. Their biggest asset is PP&E, $104 billion. The cost of all the warehouses. They do lots of acquisitions, $28 billion of goodwill. Total assets, $255 billion. Their biggest liability is accounts payable. They buy on credit, $56 billion. Accrued liabilities, these are expenses they've incurred but haven't paid yet. Possibly marketing expenses or bonuses for its executives, $29 billion. $36.8 billion of long-term debt. Let's look at the equity section of their balance sheet. Retained earnings of $85 billion. That's a sum of all their prior net incomes minus the dividends they paid out. So total equity of $85 billion. So they're a really profitable company. Let's look at the statement of cash flows. This is for the last 2 quarters. And the way you calculate operating cash flow, the $18 billion, you start with your net income, that's $10 billion. Then you add back the non-cash items on the income statement. Depreciation and amortization is the big one, $5.8 billion. Then you adjust for changes in working capital. That's how you get to $18 billion. In the investing section, they spend a lot on PP&E, $9.2 billion. That's up from $7.5 billion last year. In their financing section, they talk about debt, equity, and dividends. They borrowed $4.2 billion on short-term debt. They borrowed $5 billion on long-term debt. They paid back $4.1 billion on long-term debt. They paid over $3 billion in dividends to their investors. They bought back $1.2 billion of stock, but last year a lot more, $5.7 billion. And they purchased back the stock of the non-controlling interest. That was $3.5 billion. So they had a cash outflow of $3.3 billion in their financing section. Last year it was $1.4 billion. Here's a visual of their revenue and operating income. Their international revenue is growing the most at 13%. Walmart US is their biggest revenue by far, growing 5.5%. Sam's Club down a little bit. But in terms of operating income, Sam's Club is improving the most. They improved 22%. International 14%, and US 7.6%. So even though their revenue grew 6%, their operating income grew more, 6.7%. So their margins are improving. Let's look at the stock on Simply Wall Street. Last price was $158, market cap $425 billion, down 2% in the past week, up 15% in the past year. Let's learn a little more about the company. Walmart is a retailer and wholesaler worldwide. They have 3 segments: Walmart US, Walmart International, and Sam's Club. They operate supercenters, supermarkets, hypermarkets, warehouse clubs, cash and carry stores, and discount stores under Walmart and Walmart Neighborhood Market brands. Membership-only warehouse clubs, e-commerce websites such as Walmart.com, Walmart.com.mx for Mexico, Walmart.ca for Canada, Flipkart in India, and Sam's Club. They sell grocery and consumables, including dry grocery, snacks, dairy, meat, produce, bakery, and deli, alcoholic and non-alcoholic beverages, floral, candy, and other grocery items. Also frozen food, health and beauty products, paper goods, laundry and home care, baby care, pet supplies, and lots of other products. They have gas stations at some of their stores. They sell tobacco and health and wellness products covering pharmacy, optical and hearing services, over-the-counter drugs, and other medical products. They offer home improvement, outdoor living, gardening, furniture, apparel, jewelry, tools, and power equipment, houseware, toys, seasonal items, mattresses, and tire and battery centers. They also sell electronics, software, video games, office supplies, appliances, and gift cards. It operates a digital payment platform and offers financial services and related products, including money transfers, bill payments, money orders, check cashing, prepaid access, credit cards, lending, and earned wage access. They used to be known as Walmart Stores and changed its name to Walmart in 2018. They were founded in 1945, 68 years ago, in Bentonville, Arkansas. They are the pride of Arkansas. They list 2 risks: significant insider selling over the last 3 months, large one-off items impacting financials. Here's a stock price since 1990. It had a really nice run-up until 2000 with $67. But if you bought it in 2000, 16 years later, it was still around that price. Then it had a really big bull run up through 2022, hitting about 160 or close to it. Like a lot of stocks around that time, it did struggle. It went from about 155 to under 140. That was in March 2023. Just this month, it hit its all-time high, over 160. It has come down a little bit since that peak, but not too much. Simply Wall Street's valuation is 170. They say the stock is 7% undervalued. 38 analysts priced this stock at 177. They also say the stock is undervalued. Their revenue seems to increase pretty much every year, but not too much. It was $460 billion in 2012. Then it increased slightly over the next decade. With inflation, it seems to be going up a little more the past few years. over 630 billion currently. That's for the trailing 12 months. The forecast for 2026 is 680 billion. This red line here is their debt balance since 2012. It was 55 billion. In 2013, it peaked at 58 billion, and then it went down and came up, then down again, and it's sitting around 44 billion currently. But their equity is always higher than their debt, so their debt to equity ratio is below 100%, currently at 52%. This green line is their cash balance, which is currently 14 billion. Its peak was 23 billion in 2021. They pay their next dividend on January 2nd, so you want to own the stock before December 7th if you want to get that dividend. They seem to raise their dividend each year. They were paying $1.88 per share in 2013, and it goes up little by little every single year. Currently at $2.28 per share, forecast is $2.40 by 2026. The yield was much higher in 2015, close to 3%. But the stock price has been going up since then, so the yield has been coming down. It's only at 1.4% now. The forecast by 2026 is 1.5%. In the past 12 months, lots of insider selling, very little buying. You can see this list. A lot by the Walton family. 2.1 million shares, 2.6 million, 3.4 million, 3.1 million. Here's a small buy, 7,200. And the list keeps going on and on. In the past year, nearly 40 million shares have been sold by insiders. 46% of the companies owned by private companies, 34% by institutions, 19% by the general public, and 1% by insiders. I'm sure you guessed it, the Walton family is the biggest shareholder at 37%. Do you watch that TV show Succession? It's on HBO. When I watch that show, the only family I could think of that might fit that mold is the Walton family. And the entity is called Walton Enterprises. There's another entity called Walton Family. They own 8.75%. Their employee count is fairly steady. It is down a little bit. It was 2.3 million at a couple of points. It's currently at 2.1 million. And the shares trade in a lot of places. The New York Stock Exchange, Lima Bolsa, Deutsche Börse, Mexican Bolsa, Swiss, Zitra, London Stock Exchange, Santiago, EuroTLX, Wiener Börse, the BATS Europe, Buenos Aires, Sao Paulo Bolsa, and the NEO. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.